Hey, everybody. Welcome to the weekly wrap up. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Now, we did see the markets this week end on a high note with the stock market floating up today on extremely light volume. One thing that I've learned over 26 years of investing is that when you have a Friday in August, when the kids are not back at school, chances are the big institutional traders and investors will head out to the Hamptons on Friday morning and basically take a long weekend. And so you don't have the same powerful sell off in the market that we've seen previous days where we opened higher and then had that downward pressure, like for instance on Thursday, where markets opened higher and ended the day flat to negative. All right. So again, think about it like this. You didn't have any economic news this morning. You didn't have any big earnings this morning. And so there was really no reason for the big institutional traders to stay at their desks and monitor the markets. They can let their underlings do this for them and just say, hey, guys, just keep the market orderly and let retail bid the market up into the weekend. Very standard, very normal for mid to early August. All right, so let's dive into the charts here and take a look. Now, first things first, when we look at the S&P 500 on the daily chart, and what we can see here very clearly, guys, is that the S&P was up today, but it's still continuing to put in this same pattern. Now, in technical analysis, I always like to remind people that if you look at a textbook for technical analysis, this pattern is known as a bear flag. It's a right angle. However, if you have a down move like this right here, right? Down move, and then this is known as an in spirit of bear flag. Now, what's the difference here? Well, the difference is negligible. It's basically with probabilities. When you have this pattern and it's a perfect right angle or close to a perfect right angle, the odds of it playing out are probably about 75%. When it's an incline of 45 to 90 degrees, so if it's between this area here, right in here, which is basically, I would say this is about a 45-degree angle, you're looking at about 70%. So it's slightly less probable, but it is still probable that it plays out to the downside. And again, that's a little technical analysis and education for you guys on this Friday going into the weekend. So essentially what we have here, and I'm just speaking purely from probability standpoint, is we have a downward move, two big candles down, and then from there, 1, 2, 3, 4, 5 sideways to slightly up days in the market. Again, we had a green day, red day, green day, red day, green day. It's basically like a Christmas tree right here. And that again creates a bear flag in spirit of. Now, again, the odds favor a rollover next week, again, versus a break and close above this high and this yellow trend line. Now, what's this trend line here, folks? For those of you that haven't followed me in the game plan, let's zoom out on this chart. This is a channel. And again, channels are very, very powerful. And so how did I find this channel? Well, essentially, I just said, okay, let me take the two major lows going back for the last 2 years. Here's November or October of 2023. We had a nice sell-off during that period. Basically, from July until late October, we were down, small bounce, down further, small bounce, down further, right? And we take that low and we connect it to the April 7th low. Then we stretch a trend line all the way up to the highest point all along here, which happens to be here. And then you zoom over and you see, wow, we gapped up a week ago from last Thursday or a week ago from yesterday right into that level and reversed. And we got a reversal candle right there. So that's where that trend line comes from. And that again shows us that the last time we hit it, we came down, we chopped around, we even went a little bit higher here, and then we had the big rollover. Just like the bottom of the parallel, you have huge moves to the upside, huge moves to the upside. And so that's why I use that as a factor for my analysis, is because it clearly shows that history has shown us that you get big moves off of both the lower line here of the parallel and the upper line. Very, very important there. All right. So that's where we are on the S&P 500. If we look at the dollar today, the dollar eked out a small gain after a pretty good fall since a week ago from Friday when we got the jobs report. Same thing, look at the parallel. So the parallel here gives us a great basis for understanding where to sell the dollar versus other currencies, which is what the DXY is, versus buy. So every time it hits up here, boom, it comes all the way down. When it hits low, the low of the trend line, it's a buy, right? It's a buy right back up. Now we're kind of in the midpoint right now, so there's no obvious, easy, high probable solution here in terms of a trade in the US dollar. But nonetheless, if it does go back up here, it would be a sell. And if it goes down here, it would be a buy. You essentially, the key here, folks, is when you have a pattern, we all like to speculate, oh, that'll eventually break out, or oh, that'll eventually break down. But in essence, the best traders in the world are ones that say, hey, listen, the pattern is there. I'm not going to overthink this or let my emotion take control, and I'm going to let the pattern dictate my trading until proven otherwise. Now, eventually, it probably will be proven otherwise, but how many trades are there as a swing trader within that parallel, just like within the S&P 500 parallel that I just showed you? Very, very key in terms of human psychology. All right, so let's go to the U.S. 10-year yield. The 10-year yield, what kind of pattern is this, guys? It's almost identical to the S&P 500. Big down move, a break of the wedge pattern. So we have a breakdown in progress. You're now getting the flag pull down with an inside bar kind of consolidation up, about a 45-degree angle. This again would be called an in spirit of bear flag. And how would we expect this to resolve itself? What would be the most probable outcome? Not the guaranteed outcome. There's no such thing as guaranteed in trading. But the most probable outcome would be something like this, and then back down and making new lows. So maybe it gets back to what we call the scene of the crime. This is the scene of the crime because this is where it held, and broke. So this is like the jail break. So this would be the scene of the crime here where it breaks through the jail wall, and now it comes back to that scene of the crime, and then it can play out to the downside. So very cool in that respect, but that's your general probable outcome for the 10-year. All right, today in the action, let's talk about some stocks. Apple continued ripping higher here. Apple's had a tremendous move from about $200 to now $230 per the close. It ripped right through this gap fill, which is pretty astounding considering the size and market cap of Apple. However, let's talk about where this is going to meet resistance. So the first thing I'm seeing is this, guys. What we can see right here is we broke even above this trend line. So we broke above that sloping trend line. So that's no longer a level to watch. What else do we do here? So what we can do is we can start to look for other trend lines. We can zoom out. We can say, okay, well, very clearly, if we connect this to this low, lo and behold, we had basically a move down in April that held that. That doesn't give us resistance on Apple, though. But what we can do is say, okay, well, we can see that we have a major pivot here. And we could even say, okay, well, what about here? What about in this range? You kind of go into this low, it kisses here, it breaks, it retraces, and then doesn't it make sense that Apple could rise maybe as high as around 244 and then run into resistance? In addition, you can also see that right around 247 is a gap fill here. Now, listen, Apple, nothing says that Apple's going to go straight up there. Maybe it pulls back a little bit, but this is clearly a strong move in Apple. And even if we were to pull back, I would still expect a little further upside. But once we get up to this like 244 to 247 level, that's where I would start to say, okay, now we're into some serious resistance. Look for Apple to have a significant pullback. So that's kind of what I'm looking at on Apple. Now, Tesla. Tesla has been stuck in a wedge pattern. Wedge patterns, remember, are periods where you have a big move up, then a smaller move down, a smaller move up, even smaller move down. Essentially, it's like it's getting funneled into a tighter and tighter funnel. And then you ultimately look for which direction it breaks. Remember, if we go back to the 10-year, this was a classic wedge pattern and it broke to the downside. So which way is Tesla going to break? To be honest, we don't know yet. But ultimately, when we do see a break, it's usually a big move in that direction. And notice how the high of today's move, it basically kissed the wedge trend line and then pulled back and closed a little bit lower. So next week on Tesla, let's watch very closely. Do we get a break in one direction? If we do, you look for a big move outside of that range. All right, you look for a big move in that direction. All right, next up, we have NVIDIA. NVIDIA was up on Friday about $2 or about 1%. It continues to gently grind higher. Amazing how this longer term trend line has held from April 7th's low. And notice how many times we've hit on this line. Today it held again and kind of held up here. One thing that's catching my eye, we did not close above this big reversal red candle high. We closed below it. But really, if you're someone who's watching the stock market, you know, you can be overall bearish, but until NVIDIA breaks, the markets probably are not going to break significantly lower. Remember, NVIDIA now has a market cap nearly $4.5 trillion, and that very clearly is the leader. It's way bigger than Microsoft, way bigger than Apple at this point, and it essentially encompasses the AI craze. And so you have to watch as a trader, if you're watching this, when this line breaks, that's when, in my opinion, the markets really start to sell off to the downside. Google today had a great move. The level on Google/Alphabet that I'm watching, double top with a gap fill, will be right up here at 206. I will be looking to trade this next week. This is a great level for resistance on Google, both as a day trade and potential swing trade. So a good opportunity. Again, 206.50 would be your gap fill double top. Amazon, you can see on earnings about a week ago, it had a big tumble. It's already snapping back because the markets have been generally floating higher. Granted, the S&P hasn't made a new high, but again, just a few of these days, technology has become, again, favored like it has been for so long, and even Amazon's catching a bid. JP Morgan. Now, this is an interesting chart, guys. Look at this on JPM. JPM, beautiful parallel. So again, here's your high pivot. Here's your two low pivots. And look, we kissed it here, pulled back, and went up and hit it again. This is actually where I bought puts with smart money options investors here. We bought puts on this, and I'm looking now. So you can see it's already backing off. When this line breaks, which, by the way, notice this line's parallel to this line, which is parallel to this line. When this line breaks at approximately 285, the floodgate should open for a move down to about 268. 268 is going to be a fair amount of support here, but nonetheless, that would be a nice, about $20 drop. Not quite 10%, but again, still a very solid drop on JP Morgan. The key is going to be that break of that trend line at 285. One of my sleeper holds for next week, guys, is SRPT. This is a biotech that has run into some issues, a lot of hate on it, which is what makes me actually like it. The key here is look at the pattern formation. This is a classic, what I would refer to as a cup and handle pattern. By the way, there's no guarantees with biotechs, but look at this beautiful consolidation pattern right here. So here's your cup, here's your consolidation. If you can get a breakout, you should easily head up to about $23, which again, look at this high right here, right through here. And then if it breaks 23, it could honestly fill the gap all the way back to 36. That might be a little stretch to think it could go back there, but I do still think it could easily get back to 23, which would still be about a 27 to 30% move up on this biotech. So I like that pattern, folks. Keep that on your radar. Moving over to Bitcoin. Bitcoin, again, this is playing out exactly as I drew it up for the last month or so. Your topping tail was my first indicator that Bitcoin would struggle a little bit. We had a bear flag off of that topping tail, which told me it was going to break down. It did about a week ago. It goes right into this level, which happened to be this high pivot here. That obviously is technical support. And now it's retraced into the scene of the crime. Now, this should be big resistance. We did see Bitcoin pull back. And again, I would in general expect resistance until proven otherwise. And even if it gets through this line, this high area here will still be resistance. And then you even have resistance at the topping tail high. Now, if it eclipses the topping tail high, then it's off to the races, right? Then it can, assuming it closes and confirms above that, off to the races probably to 130, 135. Who knows where it goes. But right now, this is fighting a lot of resistance here. Then it has resistance here and all the way up to about 123 on the chart. If it turns down and breaks 111,800, 108,000 is your technical support. ETH is looking strong here, guys. ETH is breaking above the resistance level. Again, that's a beautiful move to the upside. Again, if this continues up, there's not a ton of upside here, and I'll show you why. This former pivot high is at 4,100. That's my next target for resistance. We got to about 44,000. What was that? 4,000 and basically a little over $4,000 today. And then it has kind of stalled out here. But nonetheless, at this point, folks, to me, there should be a little bit more upside in ETH, but it is limited. It's going to face its first big test at 4,100. On that chart. All right, let's go into gold here real quick and see what gold has in store for us. Gold basically ending the day flattish on the day, right into this key long-term trend line, which is also very close to this major downsloping. So you are still into resistance on gold, but if you're a bull and gold can break and confirm above this, let's say, 34.15-ish area, if it can close and confirm above there, then you could be headed back to 3,500, breaks 3,500. You're going to 4,000. And by the way, Right now, you have to respect the resistance because that's what technical analysis teaches us, to kind of put our personal beliefs aside. But mid to long term, the chart is still very bullish. It's just struggling here in the near term at key resistance. All right, next up, let's look at silver. Silver today was flat on the day going into the weekend. You have a little bit of a downward move with a little bearish pattern. We wouldn't call this an in spirit of bear flag because it's a little steep, but it's still slightly, it's about a 60% favoring downside, which again is not that much more than 50-50, frankly. But remember, the angles, like I showed you at the beginning, determine the probability. So again, we go from, a classic bear flag, which favors the downside, to 75%, to an in spirit of, which is like 70%. You get to like a little bit of a steeper angle like this, and it honestly goes to about the 60%-ish range. And even if it was steeper, it'd be even 50-50. But right now, again, still slightly favors the downside, but again, not tremendously. My buy level, if it does dump, is around 34.65. And on the upside, if you're a bull, you got to see this 39.50 level on silver get taken out. That is your level that we have to listen. We have to respect it. Why do we have to respect it? Because it's proven that literally 1, 2, 3, 4, 5, and 6 hits, 6 hits in a row over the span of basically since 2022 here. Yeah. So basically in 2.5 years, 6 hits, it has rejected it every single time. And so who are we as individuals, unless we're using emotion, to assume it's going to break above that? And that's really what I want to get to you guys, is to understand that we are not trying to reinvent anything. As traders, if you're a trader like me, if you're an investor like me, we always let our emotions kind of take over, and we believe, oh, it's going to do this because I really want it to, so I'm going to believe in it. Markets don't care. Price is truth, and technical analysis is proven for decades, if not millennia, that it has worked. And listen, believe it or not, you can go back and chart things like the Tulip Mania. You can chart stuff in like ancient Egypt, like all of this stuff. They used to do this stuff, right? I mean, the commodities were around forever. So you have to understand that human emotion rules, and that's why that plays out. Human emotion plays out in charts, and that's why it works, because human emotion doesn't change. It doesn't change. Greed and fear doesn't change, folks. It is the same every time. That's why you see the same bubble tendencies. Like in 2021, the euphoria of GameStop, AMC, and everything that was going on, that marked a high before a bear market. In 1999 to 2000, the dot-com craziness marked a high before. The greed was the same. I mean, it certainly is over different things. Dot-coms, crypto in 2021. So dot-coms was 99, 2000. Crypto, 2021, and like AMC. But it's the same emotion, right? It's the same base level human emotion. And that's why, again, technical analysis to me is the go-to, because people don't change. We don't change. It is what it is. In 100 years, people will still have greed and fear. 1,000 years, people still have greed and fear. Okay, let's quickly go to oil here, guys. If we take a look at oil continued its breakdown today, confirming below this trend line. So again, we can see, what's this pattern, guys? Classic bear flag. This was a pretty good right angle, not quite right, but I would say this was close to 75% chance that it was going to play out, and it is playing out. 2, 4, 6, 7 down days in a row. It is getting close to having a small bounce day, but I still think even if it gets a small bounce day, $60 per barrel is still on the horizon. And then lastly, let's take a look here. If we look at natural gas did come down today, but tagged this level again, which it is weakening. That level is definitely weakening. And the hammering on this over the last week is weakening this level. But ultimately, again, it's still holding, so we respect it. But if it breaks, 263 is your next support. If it holds, I don't see a buy here. There's nothing for me to do here. But again, I'm just watching this. Now, on the bigger time frame, this head and shoulders needs to be monitored, right? This head and shoulders, if it ever played out, natural gas would go to about $1 based on the measured move, which would be pretty remarkable. I've said to my members, at Smart Money stocks and ETFs and commodities and options and crypto, if nat gas goes to $1, where's the U.S. economy at that point? Pretty ugly, I'm guessing. So again, we'll see if it plays out or not. It hasn't even triggered yet, but it is something that we have to monitor. That would be a longer term target, not a short term target. Short term target is 263 on natural gas. All right, so next week, we are going to get back into it. I believe CPI, PPI data comes out next week. So we're going to get some economic inflation numbers. We'll also get a few more earnings, but we're really through the big players in the earnings arena, obviously the mega caps, except for NVIDIA, which reports later in August. But nonetheless, next week, I look at this week as being a little bit of a quieter week. Previously, remember, in the previous week to this week, we had the Fed announcement, we had PCE, we had jobs data. I mean, it was like craziness. This week was a little relaxing. We got the bear flag on the S&P. Technical analysis tells me that's bearish until proven otherwise. So I would be negative on my bias going into next week. All right. Thank you guys so much for your support. Remember, verified investing is all about no BS, just charts. And that means it equals probabilities, and we can play the probabilities to make money. You guys have a great one as always. Thanks so much for tuning in, and thank you for coming to verifiedinvesting.com, where it's everything charts, everything data. Have a good one. Take care.